The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show like we usually do with the DAX index using the hourly chart. As you can see, we hit two critical ratios this morning in the DAX up at the 618 and 78% level. And of course, if we look at the daily chart, you'll see pretty much the same thing, but it does show the butterfly pattern that we had here just about 3 days ago that has produced a little bit of a rally here. Now, a very substantial rally here in the NASDAQ, of course, which has been the big daddy rabbit of the whole thing. So we'll see how that keeps going. We got something that's really important, in my opinion, folks. And here again, it's my opinion, but let's just take a quick look at this. This is what we were looking at coming into this week that I put into the newsletter. And one of the things that we were watching for was a situation where we were going to have a 61% retracement and several ABCD patterns forming down here at this 45.50 level in the crude oil. So that's something that we probably should pay a little bit of attention to if you like, Fibonacci ratios and patterns. If you look at this on a little bit closer or a little bit longer time frame with the daily, you'll see that 61% retracement, that blue line that's there, that comes in right about that 45 level. That's right near the low that we had today, so that's another important thing. And then finally, what we ought to take a look at here is to look at this over the last 3 days. And if you look at it with a little bit of a microscope, I suppose, you'll see that we've made some type of a three drive to a bottom pattern here between the 28th, the 29th, and the 30th. By the way, today's the anniversary of the death of Princess Di 20 years ago. Very, very sad day. Anyway, if we'll take a look at this, we want to see that this is a possible three drive to a bottom, but we're very close. We're within about 10 pips of that exact 61% retracement, which is at 45.40. Whether that's close enough or not, I'm not sure. All I know is it looks a very, very interesting, not hardly do that, not hardly. Anyway, that's what we're sort of paying attention to that with a great deal of interest, of course. Now, here is my 2 cents worth. This is what I was looking at coming into Monday. And as you can see, this is the New York Stock Exchange Index. This is the real stock market. It's not the NASDAQ with those 20 little puppies that jump around a lot. And it's not the Dow Jones with those 30 little stocks that jump around a lot. And it's not the S&P 500 with its stocks that are heavily weighted. Anyway, this is the New York Stock Exchange Index, and we had made a 78% rally and a 50% rally coming into Monday, and we've had a pretty good rally this week, haven't we, folks? Let's just look to see what really's happened, okay? Now, here again, I might be just, chopping wood in the middle of a forest with no trees, but here is a situation where we're having a nice 2-day rally. It's right into this 61. It's actually up. It got up to the 78% level, I believe. I think that's the earlier one that I put in. I believe it's at the 78% level. I'm not. Well, let me find it. Doggone it. Well, I'll go on to the next one anyway until I do find it. No, that's it. That's the one. That's really what it's done. It's only rallied to a 78% off that Monday's low. So Monday's high. But here's the one that's really interesting, and this is the E-mini S&P. I know you folks like patterns and stuff. At least some of you do. And if you'll take a look at this, in the E-mini S&P, you're looking at a 61% retracement of the high that we made back on August the 8th. It's also a 78% retracement of the high that we made back on August the 15th. So this should be really strong resistance here in this 265 to 268 level would be my best guess as looking at it as far as resistance. Now, the one that is controlling the market, of course, with a great deal of power, is the NASDAQ, and we'll put this one up so you can take a look at it. The only thing that, and remember, this is really about 20 stocks that are doing all this, folks. Of course, Apple being the big one. But you'll notice that the only thing that is really there that with any excitement at all is the fact that we made a 1.618 expansion of the high that we made on right after the solar eclipse. Now, whether that stops up here, but we should have at least some resistance at that 59.50 to 59.60 level if this is correct. And believe me, there's a lot of, with that strong move that we have there, it's very interesting to see what's going to happen. Okay, we'll see what happens with that. That's correct, Mr. P. If you get above that, 224.68, it could go a great deal higher, but there should be at least some resistance, coming into that at that particular point. At least that's what it looks like as we, look at these things one at a time, and that's what we're trying to do. Finally, let's take a look at the Dow Jones E-mini, looking at the pattern that we have here, and we'll take a look at this, and we'll. By the way, folks, I will not be on the show tomorrow. It's a long weekend, and we're going to do some fun family things, and so we're going to take a 4-day holiday. And but anyway, here, let's take a look here at the Dow Jones E-mini. We had the head and shoulders pattern. You can see it was perfectly symmetrical. We had the big drop. It went from 22,000 down to 21,005. Well, let's say 21,580, and now we've had the rally back to the 61% retracement at this 21,940, 950 level. So there should be some resistance coming in here along with this with the Dow Jones, because you do have that ABCD pattern that does make it a Gartley. And so these are some of the ones that we want to be, keeping a very close eye on this morning as we look at these markets unfold this morning. Now, the gold market, I don't know if I have enough time to get to the gold market before we move on to some other things. I really need to cover that gold market because it's at a really critical level. As we've mentioned before, we'll put this up here. This is the high that we made, and I'll get to the other part of it after the break, I'm sure. But here's what we're looking at here, folks. If you'll notice here, I'm going to show you the short part of this, the smaller time frame on this chart in just a moment. But what I'd like for you to realize here is if you look at the high that we made back where you see that point ABCD pattern was at that 1305 level. If you drew a line across that, which I'm going to in just a moment after the break, I want to show you why that line is such important support. And that's why we're watching. That's at 1305, and I believe that was the overnight low. We're very, very close to it. So I will show you that after the break, but it's important to look at that because these old highs many times act as support when the market backs off to that level. So that's why I think it's an important thing, to pay close attention to, as we're looking at these, because it's very interesting that it would hold that level. That's absolutely for sure. And I'll cover that right after. I got the chart all ready to go. The low was 1302 in the bonds, the S&P. So bear with me. Wow, in the gold. Sorry, folks. Wow.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I want to talk a little bit about the gold market here. I brought in the shorter term 60-minute chart so you can take a look at it. You'll notice that the first breakdown was $20, and from that level we rallied up to a very shallow 382 retracement at that 1319 level, and then we came down another $17 from 1319 to 1302. Remember, 17 is one half of the harmonic number, which is 34 in gold. So we stopped right spot on. If you'll notice the little red line there, it's actually, I guess it's sort of a blood red line that shows the old high from back on the 18th. Well, when we hit 1302, that was only $1 away from the 0.618 retracement, which would have come in at 1301. So that's pretty close. And now we've had a little bit of a rally back. Also going up to that 38%. I haven't checked it recently, but it was around 13 and change that I looked at before. But as long as this low holds at this 1302, we've got a chance for this market to continue to go higher. But it's starting to give a little bit of indication that maybe that high that we made at 1331 might be a high for quite some time. If you'll remember, when we looked at this on the longer term basis in the gold market, I'll put this up here so you can take a look at it, that 1.27 expansion that we had on the gold at that 1331 level was also a 78% retracement of the high that we made in 2016. So I think that could be very important also. And silver was still lagging badly, all during this time. So we'll see what's going on. Yes, folks, we've switched over from September bonds to the Christmas bonds, December. So pay, keep a close eye on those because it looks very interesting to see, what's going to happen with that. Now, I did want to mention, remember we had Kyle Cooper on as our guest here on Monday, and we talked about the crude oil market and also the gasoline market and the refineries and stuff. I just wanted to show you what's happened with gasoline futures on a longer term basis now, because they've had some problems overnight with a couple of refineries that have had some evidently some mechanical or physical problems that are very, very important. But we want to go down to the smaller level that we were looking at Sunday night and also on our show Monday, because that'll give us a clearer picture of what's really happening here in the gasoline futures. And folks, I trade these very seldom, but if you'll notice here, Sunday night, you can see we had the gap up to point B, and then we pulled back about 10 cents a gallon to the 61% retracement. That was also the 382 retracement of the low that we made back on August the 15th. And then you see we started this explosive move to the upside where we just, started to just really, ratchet higher. The ABCD on this came in at 194. But the strength of this trend, if you'll notice that from point C, what's happening, that the line of ascent is roughly, probably 78%. It's not quite 90%, but it's basically a vertical. You don't want to try to do anything in front of this, because this thing is just moving like a rocket. You've got to wait till it gives you some type of a spot where it's going to say, whoa, maybe I've slowed down a bit. But boy, you don't see any of that right here. So whenever you see these really strong points coming out of point C, you have to respect those folks. They on the upside and the downside. Oh, explosive move. Okay, Duffy, you got me on that one. Well, at least I'm not dealing in TNT futures. Okay, anyway, that's what we're looking at in this. The crude oil, I think, has got a chance for a bottom in here, and I don't know if that have any effect with the gasoline, like gasoline needs any help at all. By the way, I did go and check on the site for the open interest at the Merck to see what there was for gasoline. Folks, if you want to get frustrated, go to the www.cme.com and go to energy futures. I didn't even understand 90% of the things that are out there in futures. I mean, a lot of them have virtually no open interest, but I mean, you cannot believe all the vehicles that are available for trading futures. I mean, I was shocked. And I mean, it was a lot, and a lot of them have almost no open interest. In fact, I couldn't even find the gasoline futures in the group. I saw a couple of ROBs, but I couldn't find the one that I was looking for, so I couldn't tell whether there was a decrease in open interest at this time or not. But I'm going to check with Kyle Cooper either today or tomorrow to find out what's going on with that, because if the open interest is dropping and the prices are going up, that's short covering, and once that is over, then you're going to see a pretty good move to the downside, I would think. But right now, I can't say that because I don't know what those figures are. That's the bottom line here of what we're looking at in the crude oil futures, and also with the gasoline is what it appears to me. Now, one thing that is a little troubling, and let's just put this up here because I wanted to show you the Apple on a long-term basis. Apple is now trading above the 1.618 level, which came in at 162.92. We're trading at 163.58, I believe. So that is also a very possible move to see if it could go a lot higher. And believe me, folks, these numbers that we're showing you in the S&P and in the Dow Jones and also in the New York Stock Exchange Index, that they could easily turn and make new highs. And if they do, it's going to be a very interesting pattern to unfold. We've got that long-term cycle that's supposed to be finishing here in August. And just because we're rallying back here, this is just a normal rally. If you look at the New York Stock Exchange Index, this is nothing more than a normal rally. What is happening is they're using the old magician's tricks. They look at over here where they're doing something on the other side, and that's what's happening with the NASDAQ and also the Dow and a little bit of the S&P, because the market is not nearly that strong. It really isn't. And if we looked at that overall picture of the new highs to new lows. We still haven't broken into that level where we've gone below the 200-day moving average between advances and declines, advances and declines. But if we do that, that's going to put some extra pressure on the market. We've got a monstrous cycle coming in here over the weekend on the 3rd and 4th. Of course, a holiday is going to be on the 4th, I believe, is a holiday. Let's double check. Yeah, the holiday's on the 4th, so we'll be back on the 5th. So over Sunday, Monday, we have that big cycle. And remember, Bill Meridian was on, and he was talking about the potential for really heavy conflict due to the fact of one of the planets, I believe it was Mars, is making a very special aspect at that time. And we want to be able to be prepared for that in case it does happen, because we have a lot of saber rattling in the world, especially in North Korea, and whether anything gets done with that, I don't know, but that's not in my pay grade. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, let's take a look here at the XAU, which is the gold-silver index. As you'll notice here, the gold line that you see is actually the price of spot gold. And you'll notice that the important part of this, I believe, is the time period from the low on July the 8th. You'll notice that we had a very nice ABCD pattern that completed perfectly the day that this would have been on Tuesday, and we backed off a little bit from there. That was absolutely a perfect ABCD and also perfect in time. In other words, between July, those 3 weeks that it went up, stopping at point B and then coming down to point C. Point D was also related to it in time. Now, you'll notice this line that we have there where it broke out of to the upside. That's going to be very key support on the downside, folks. It really needs to hold that level for two reasons. One, it would be a 61% retracement coming off of point C, and also it would be a 20-minute line coming off of the April high and also the July high. That would be a very important spot to watch if it does get down to that area. The fact that we've had a little bit of a shooting star pattern on 2 days ago, and then the down move yesterday tells us that there is a possibility that we could easily get down to that level. Now, we'll have to wait and see what happens, but that's at least what it's doing right now as we take a look at it. Now, we ought to take a quick look here at the euro this morning. Oh, we have a request to take a look at sugar. Sugar the sweet. Let's get this up here and take a look at it. I always remember sugar because back in 1966, my friend Roy Fassel, who ran the offices for Clayton Brokerage, and then he took over for Conti Commodity back in 66. I met him in 65, and he had sold sugar. The high on sugar was, I believe, 66.22, and Roy had sold it at 66.12. It was traded $11 a tick, so he was out $20. And he was so nervous that the market, and believe me, sugar had gone from 4 cents to 66. That was equivalent to one of the biggest bull markets of all time. And he was so nervous that he took it off for a $100 profit, and that was the high for sugar for the lifetime. And he never forgot that. He always laughed about it. But anyway, here's what sugar's doing. You'll see it made a 78% retracement, spot on, back right after the first of the year. Then we had the big move down. Then we had the little ABCD pattern that stopped right at the 61% retracement. We came down, almost made a double bottom, and then we've had a little bit of a 61% retracement in here. So it's trying to make a bottom in here, but frankly, it's got a little bit more to go as we see this. Folks, this happened during the time when they had some of the most bullish sugar statistics that you could ever imagine. When it was at 25, there were several major sugar houses that, talk about supply demand, that sugar had a chance to go to $40 or $50 a pound. And of course, it went from 25 to 16. So they're wrong a lot, just like everybody else is. So keep a very close eye on it. Now, we've got an interesting one here in the euro this morning. Let's just take a quick look at it, and we'll see what we're looking at right here. 1 second here, and we'll put this up. You'll notice that we have a 1.618 expansion up here at that 120.60 level. That was off the high that we made back in early August. That came in at 120.65. The high was 120.72, and now we've come down and we've touched the 61% retracement of the low 2 weeks ago. So that should be very strong support here at the 118.20 level in the euro foreign exchange. Now, this isn't the futures, folks. This is the foreign exchange. If you do trade the futures, and they are a great trade to trade futures in the currencies, because you get a much better commission break. If you do trade currencies with the CME, you're getting a much better break. The reason why is you can trade off the bid or the ask. If you trade foreign exchange, they don't charge you a commission, but you pay a pip spread. And usually for the public, it's about 2 pips in the euro, which is $20. So you're paying a $20 commission. If you go to the Chicago Mercantile Exchange through one of their registered brokers, whichever one you want to pick, you usually pay around 4, sometimes even less, or $5 at the most. Even Interactive Brokers, I believe, only charges $5. So your commission rate is 75% less, and you have good liquidity. You know, you're not trading hundreds of contracts, of course, but that thing will handle just about anything you want to throw at it. So that's a good way to save money, is to trade the foreign exchange futures through the CME. I don't know if you folks realize that, but that is a big deal. Now, if you trade hundreds and hundreds of contracts, you really need to go through the foreign exchange banks, but that's neither here nor there. There should be some strong support there in the euro at that point. That's the main thing that we want to be, paying very, very close attention to, at least as we watch this unfortunate. Let's talk about a trade that we talked about yesterday. That is, we bought the corn here at the 347 level. I believe it's trading at 345 right now. So our risk on that was only 6 cents. So if the corn gets down to 341, that is not going to be a profitable trade. So we'll see if we can get this moving as we go through here. Someone's asking a question. The euro is it was a short-term buy. Well, I don't know if it's short-term or long-term. All I'm saying is it made a perfect 61% retracement off of the high, and usually 618s are pretty good. So that's what I think it is. And if we get below 118, then this is wrong. So all it's telling you here at this 61% retracement is a chance to take a quick look at it. All right, we've had a request here for taking a look at the euro versus the pound. If you'll give me 1 second, we do that cross rate, and it's a very, very powerful one to trade. So give me 1 second to put it up here, and we will take a look at it right here. It'll only take me a second to get it up, and oh, well, we're right up here, right here. This is a very interesting one. Hold on 1 second, and we'll bring it up. It'll just take me a second here. Hold on, and we'll take a look at it. Well, let me open it up just a little bit so we can see it a little bit better. Yeah, this is a very interesting one, folks. This is a good principle for new highs and new lows and stuff. So give me 1 second to get this up here to take a look at it. This is one of the reasons why buying breakouts is so hard. You'll notice here, when you look in the middle of the chart here, you see that 104 level right in the middle in blue. That means that it took out the high from October by just a couple of pips. And look what's happened. It's already backed off about 100 pips from that level. So that's telling you that is nothing more than a testing of that high. So that doesn't really mean very much. Now, if we take a look at this, on a long-term basis, let's just look at this because it's a big difference between this chart here and the one on the daily. You'll notice that the weekly chart, we've taken out that weekly high by just a pip or two. You see that? So that is a very strong probability that could be a double top in the euro versus the pound. That means you want to short the pound. Let's try it again, Larry. Short the euro and buy the pound. When you see euro pound, that means you're long the euro and short the pound as a spread. So this looks like there's a potential double top in here, which gives credence that maybe the euro has made some type of a significant top. So, that's two different things, folks. So you got to trade one cross rate by itself. So let's take a little break. We'll be right back. 877-927-6648.
If you're looking to open your portfolio to a world of opportunity, consider the new market-safe emerging currency CD from Everbank. This 3-year U.S. dollar-denominated CD gives you exposure to 5 equally weighted currencies from Brazil, China, India, Indonesia, and Turkey at a time when experts see great potential for global growth. Even better, it features a 7.0 leverage factor, which means you could earn a potential market upside payment of 7 times the CD's performance at maturity with no cap if the currencies increase in value over the CD's term. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. The September 28th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA, FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, we're going to take a quick look here at the Australian dollar for one of our good friends up in the far northwest. And you'll notice here that the Australian dollar's had some really good patterns, and it's got some really good support a little bit lower. So pay particular attention to that because it could be a real interesting one to look at. Now, we looked at that euro versus the pound, which looks very interesting. In other words, you would be looking to short the euro and buy the pound. So the next one you want to look at of those major cross rates, of course, is the euro versus the yen. And let's just look at that one as we're here together to take a look at it. And this is what you do for a living. You put this up here. You can see the euro. This is a euro yen on a daily basis. And I put a little red box in there because I'm going to highlight that to show you what we're looking at. You notice that that's right at a 78% retracement of the high that we made back in 2015. So what I try to do is when I'm looking at the patterns, I start with the daily pattern. And then what I'll do is I'll scroll down to a little bit smaller time frame. Let's say we do an hourly. And then if we're looking at this euro yen here, we'll see that you're going to be looking at a situation where you have a 3 drive to a top pattern on this over the last couple of months, as you can see, and that's also a 1, 2, 3, 4, 5 expanding triangle. So that's giving you more information here that the euro is weakening to the other currencies. Now remember, the euro could still go up, but the other currencies could go up faster. So that would make this cross rate go down, because if the others start increasing against the euro, then you're looking at a situation that you have to pay attention to, because when you're doing the cross rates, you have to do them separately. You can't start thinking about what's happening to the yen or what's happening to the euro. It's a ratio of those trades, and you've got to pay, really, really close attention to that. That's the main thing, because if you don't, you're going to get into a whole lot of trouble. When you're looking at the euro at the 61% retracement down there at 108.25, that's a 60-minute chart. You can't go from a 60-minute chart to a daily. Well, you can, but it's not very smart. You can't go from a 60-minute to a daily because it'll just mess you up. And that's not what you want to do. You want to keep yourself from getting in too much trouble, and that's primarily what the whole ball game is all about. We've had some questions here about the yen, and about the Treasury notes, and I'll have to do an update on that chart before I can get to that, which let me do it right now since we've got just a second to do this, and it'll only take a second. 10, 5, 4, 3, 2, 1. get it up here. Let me see, ZN, and we'll put it up. I think we'll be okay here. Yes, we're in good shape. Put this up here, and then we'll be able to see it without any trouble at all. Bear with me here. Here, we're going to be able to get it up here right now, and you'll be able to see it. TFNN makes it very easy to do this, and so you'll notice here that we've also made a 3-drive pattern here in the note market. When we got up to this 127.19, we're still not very far away, but it did complete a small ABCD pattern here. That was equivalent to trying to make that 158.20 level in the Treasury bonds, which we never got to. So we need to keep in mind that that's it. This is still the September contract, folks. This will be switching over, but they're very close, so there should not be any difference in that point. But that is a 3-drive pattern. That is complete because it has good symmetry, and you complete 2 ABCD patterns, the one from May through June and where we are now. And if you'll notice the smaller ABCD patterns in between, there's 1, 2, 3 of them that line up to this 127 and change level to see whether that's going to be, something of any significance at all. Let me regress here for just a minute and not just talk about these patterns, because that's, it's like trying to build building blocks with the I forget what they call that thing. Anyway, Legos. It's trying to build Legos. So when you do the trading, folks, the patterns don't mean anything at all unless you really understand how to handle the risk. You have to take the responsibility for the risk when you're trading. That whether you're doing crude oil or euro or whatever you're doing, you're the one that has to take the responsibility for it. We can give you some ideas and stuff like that, but you're the one that has to decide whether you want to be a buyer or a seller of anything you do here, either on your own or with the advice of anybody else or some of the ideas of anybody else or whatever it is. You're the one that must take responsibility for it. I know doing this for many, many years, and I've been money manager for many, many years. I've got 5 different licenses in this business, and believe me, I took it very, very seriously when I handled money at Drexel, and it was, there were some sleepless nights along the way, but most of all, had a lot of fun. But you have to be able to really understand, what you have at risk at any time. And sometimes that risk, you might not have any control over it. Let's say that that you were short gasoline futures, and then the hurricane hit, and where do you cover? Do you cover right away, or do you wait? I mean, that's a big thing to you have to stop and think. It's how much risk exposure you're going to have, because Roy Longstreet said, your first mistake teaches, and your second mistake kills. And one of my favorite quotes from sports is from Wayne Gretzky, is that you miss 100% of the shots you never take. And so you've got to be able to get in there and do your trades. When you lose, shake it off, go on to the next one. Watch baseball players or basketball players when they make a mistake or strike out or miss a free throw. It's like it didn't even happen. And a golfer that makes a bad shot, you've got to shake it off. You don't throw the clubs into well, I did, and I left the clubs in the water, but you don't throw the clubs in the water and walk out. So that's a thing. Yeah, when in doubt, get out. That was the famous words of Roy Longstreet also, because that was also one from W.G. Gann. He was very, very important about that. And also another one that was really big about it was Bernard Baruch, when he wrote his autobiography, My Own Story. He also talked about, being able, and remember Warren Buffett, the great Warren Buffett, who's on CNBC this morning. He has 2 rules in investing. 1, never lose money. Number 2, don't break rule number 1. So focus on the risk, not on the profit. And we see, was Lloyd Longstreet ever short street? No, I don't know what you mean by that. They lived in Clayton, Missouri, is where they did. They had a big ranch out there, he and his son Bill, and they both passed away since that time. Anyway, let's move on to, we got a break coming up here pretty quick. I want to bring up the the difference between gambling and speculation is like night and day, folks. Gambling is based on a predicated event. Toss of a car, toss of the coin, spin of the wheel, roll of the dice, blow of the whistle, toss of the ball, whatever it is, and then you have no control over it. With speculation, you can be in and out in just a second. and the odds of winning versus losing can be very, very heavily favored. So there's a big difference in that. That's not even a question to go through. I've had to answer that question many times, and I know the answer to that without any trouble. It's not the same thing, because you do have control. In gambling, you do not have control. And remember, they build those big casinos there in Las Vegas on the losers. Losers think how much money you can win. Winners think how much money you can lose. Focus on the loser. We'll cover soybeans when we get right back. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien has just announced that he'll be coming to Boston September 30th for a free workshop, The Art of Timing the Trade. Join Tom O'Brien Saturday morning, September 30th at the Boston Marriott in Burlington, Massachusetts, as he breaks down his trading methodology and provides you with the tools to become a more successful and profitable trader. Everyone that attends in person will receive a free signed copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. Daryl Martin from Apex Investing Institute will also be presenting for 90 minutes at this free event.
Hi, folks. This is Tom O'Brien. Join me in Boston on September 30th as I return to God's country for a workshop about the art of timing the trade. I look forward to seeing all the tigers and tigresses for the special free event.
All action starts early at 7:30 a.m. with a continental breakfast and wraps up at about 1 p.m. Topics that Tom will be covering during his presentation include quality volume, cause and effect, ABC structures, swing points, and much, much more. For all the information on this free Boston event taking place Saturday, September 30th, visit the front page of TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, so we're back, folks. We're going to take a look at soybeans here, and I think the thing that's most important from a technical perspective on this November soybean chart is that line that it touched on this last low. And you'll notice that that was a 20-min line. If you see the downtrend line that touches it from previous highs, that is certainly a downtrend line that touches a 20-min line. The second part of it is, if you'll notice over the last few days, we've had a perfect 61% pullback at the 932 and a quarter level. And now we're trading at 941 or something. Is no big deal, but it's at least it's held some type of minor support And believe me, this has been a pretty big move to the downside. Another one that looks interesting here, of course, that we talked about yesterday was the Christmas corn, December corn. We had that 1.618 number come in at 347. We got down to 345, 2 cents lower. We're now trading at 348.5. So it shouldn't get below that level. The risk here on corn is very, very small. I see we're trading at 943 in the November beans right now, but that's still a bit early in the day. So those are the main things. Folks, the overall trend of this stock market, I believe, is still down. I base that on the fact of what the New York Stock Exchange Index has been doing. This is what it is up to date. You'll take a look at it here. Compared to what the rest of the markets of the NASDAQ and the Dow and the E-mini, the NASDAQ, they're going nuts. But the regular stock market is not. It's still hanging very near that 50, where the 200-day moving average is turned down of the advanced decline line. If that does happen, that's a very, very negative sign. All it takes is a move of about 150 points down in the Dow. Of course, the NASDAQ would probably have to drop 150, but that's what it would probably take. Or in the S&P, you'd have to get about a 25-point move down in the S&P. So live every day in an attitude of gratitude, and I'll see you on September the 5th with our guest, Norm Winsky.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.